Be Wealthy and Smart, episode 1143.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the real estate outlook for 2023 because things are changing so fast, it's really gotten a little bit crazy. Interest rates are moving, they're fluctuating now between 6 and 7%, and that's providing some opportunity for people who are looking to buy homes. Last year, it was all about the Fed raising interest rates, and all they could do is just raise all in a row, and rates went up so fast it caught a lot of people off guard. Some people waited to see if rates would stop going up or maybe they would back down a little bit, but that didn't happen. But now we're getting closer to the end, possibly, of the Fed raising interest rates. Since peak inflation seems to be behind us, we're getting better and lower inflation numbers every month now, and the futures markets are pricing in 0.25% hike, but that's about all for right now. So we're going to look at a couple of articles and see what they're saying about mortgage rates and opportunities for home buyers. So first, Freddie Mac is reporting that mortgage rates have dropped back down, and although it was slight, the decrease in rates had an impact on home buyer demand. So isn't that amazing? Just a little bit of a fluctuation lower in interest rates is already showing positive buyer demand. That tells me that even though we've had a difficult time and the market has slowed and inventory has grown, the appetite is still there for buyers. And as soon as rates get a little bit better, I think it's going to spark another strong buying rally. The average 30-year mortgage rate today is 7.04%, and for a 15-year fixed, 5.538%. But these are significantly higher than last year when the 30-year fixed mortgage rate was 3.45% and the 15-year mortgage rate was 2.62%. Freddie Mac chief economist Sam Cater said while mortgage rates have resumed their decline, the market remains hypersensitive to rate movements, with purchase demand experiencing large swings relative to small changes in rates. Over the last few weeks, latent demand has been on display with buyers jumping in and out of the market as rates move. Senior economist at Realtor.com, George Radiu, said these small shifts in rates could create savings for borrowers who shop for the best deal. For buyers who find a home to purchase, shopping for a mortgage with multiple lenders to secure the lowest rate and fees could result not only in a lower mortgage payment, but also in tens of thousands of dollars saved over the life of the loan. Yeah, so you want to be super savvy with shopping for interest rates and have everything lined up ahead of time so that you can lock in a good deal and everything can come together for you. Now let's look at inflation, because the big factor here for the future is inflation going to cool down a bit, or is it still going to be hot? Because that's going to have the biggest impact on rates, which is going to impact the housing market. So the Consumer Price Index is what measures inflation. It rose 6.5% year over year in December, which slowed from 7.1% in November. So on a monthly basis, inflation fell 0.1% after increasing that same amount in November. And while that drop is in the right direction, consumers are increasingly borrowing money to make ends meet. George Radiu said the latest data on consumer credit shows a 7.1% yearly increase on the strength of credit card borrowing. Rising prices and lower savings are pushing many consumers to borrow more for everyday needs. With capital market volatility expected to continue, mortgage rates will maintain a seesaw trajectory over the short term, likely staying within the 6% to 7% range we've seen over the past 5 months, he said. All right, so he's predicting that rates are basically going to fluctuate between 6 and 7%. But where can you find the best bargains? That's what we're going to look at next. Buyers looking to find the best bargains are more likely to find them in markets that proliferated during the pandemic, which are west of the Mississippi, according to fintech company Knox Buyer-Seller Market Index. That index predicts that by the end of this year, 36 markets will be favorable to buyers, 41 to sellers, and 23 are going to be neutral. Knox co-founder and CEO Sean Black said, with home prices and interest rates cutting into purchasing power, the relocation hotspots where prices grew quickly during the pandemic will increasingly favor buyers in 2023, while more mid-sized markets offering good job opportunities and affordable housing will be the top performing real estate markets in 2023. This will usher in a more balanced housing market. However, home shoppers will find different scenarios depending where in the U.S. they are looking. Of course, all markets are different, but it's very interesting that their survey shows that the housing market is hotter in the West in markets like Dallas, Colorado Springs, Las Vegas, and Phoenix, and a little bit cooler in places like Hartford, Connecticut, Syracuse, New York, Harrisburg, Pennsylvania, York, Pennsylvania, and Fayetteville, North Carolina. What they're saying is that buyers will have more leverage in the West, while sellers dominate the markets in the East Coast. And the top 10 buyers markets in 2023 are number 10, Austin, number 9, Memphis, number 8, Salt Lake City, number 7, Greeley, Colorado, number 6, the Ogden-Clearfield area in Utah, number 5, the Denver, Aurora, Lakewood, Colorado area, number 4, Dallas-Fort Worth, Arlington, number 3, Las Vegas, Henderson, Paradise, number 2, Colorado Springs, and number 1, Phoenix, Mesa, and Chandler, Arizona. If you want to get the full report that Knox did of all top 25 buyers markets in 2023, I'll put the link in the show notes for you. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button, and you'll be notified as soon as new podcasts are available so you never miss one of them. And don't forget, my entire wealth mentoring library is on my website at lindapjones.com/podcasts. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.